Anyway, let's get to one of the corporates joining us on the show today on Midcap Radar. That's Insecticides India. The company has reported a mixed Q3. While the margins came in healthy, revenues were flat. Rajesh Aggarwal, Managing Director of Insecticides India, is now with us on the show. Mr. Aggarwal, if we could start with the top line first. So flat revenue growth in Q3. Break that up in terms of volumes and realization. And also for FY25, what are you likely to end the year with, considering that in the first 9 months, your top line has degrown by 3%?
The total degrowth is not 3%. It's very nominal, actually, and we should be able to make a recovery. So we had a strategy. The strategy was to sell the premium products, and very successfully we have done that. We have sold the premium products in the market, which has helped us in building our bottom line. So this year, in 9 months, we have made 128 crores, which is the highest ever profit made by the company, the PAT margin, which is 36% higher in 9 months if we compare with the previous year. So in the full year, we have the best profit made by the company is 122 crores. So that way, I can say that we are doing well. The market was tough, and technically Q3 is a lean quarter. Even Q4 for our industry, because it's a cyclic industry, generally Q3 and Q4 are lean. But the international market is changing. The market has already bottomed out and prices have started going up. And looking at that, I believe that B2C demand, B2B demand, and also international business, they all three are moving up in Q4. So there will be some better performance in this, and we should be able to make some gain in the top line also. But in terms of bottom line, I am sure that we'll end up with double-digit EBITDA margin, and which we have already shown in 9 months. So that will be the highest ever profit built by the company. And the vision is to bring the premium product and continue the sale of these premium products. In the previous years, we have launched about 10 products. There are more than 6 products in pipeline for the next year also. So these products are going well in the market, very well accepted. Like in last 2-3 years, we have launched many products, and these products are doing well. So
just some numbers, Mr. Aggarwal, sorry to interrupt. So for the first 9 months, your top line was 1,694 crore rupees. What can you end FY25 with in terms of a revenue growth? And what will the contribution of premium products rise to? As of December, I think it's 62%.
Yes, this will remain around plus minus 62%, but last year this was 59%. Okay. There will be some growth. We are targeting a growth of 3 to 4% in the complete year. So which means that we are under pressure in this Q4, but I see the export sales growing, I see the B2B sales growing, and also B2C, and the performance of last 40-45 days is plus. So I'm confident that we should be able to break even this year with the positive note. So top line will be little positive. I'll not say very positive, but yes, for future we are ready. By launch of these 16 products, 10 already come in and 6 also coming, and all these products coming in the premium segment, we are very confident that in
Mr. Aggarwal. Understood that, yes. Mr. Aggarwal, so at the start of the year, the guidance that you had given was 5 to 10% revenue growth. You are now paring down that guidance, hoping that you will see some growth as far as the top line is concerned. In terms of the EBITDA margin, what is the exact quantum that you're looking to end the year with, and what will be the corresponding PAT margin that you will end the year with? Like you mentioned, on account of the changing mix, you've actually managed to expand your margins at the expense of moderate top line growth. So give us a guidance where you will end FY25 at.
Difficult to give the exact number, but I will say that we'll beat the last year in the last quarter again. And since we are expecting some growth also, so this will be a good margin. So I can only say that the EBITDA is going to be double-digit, positive EBITDA. So we are already 11.7% roughly in 9 months. So we should be able to maintain 11% plus anyways. What it will be, difficult to say today.
Okay. Getting back to premium products, I understand in 3 months it will still probably be 62% in terms of contribution. But say 1 year, 2 years down the line, what would the contribution of premium products be? And secondly, exports is still about just 3% of your top line. You were hopeful of growing that. What is the outlook on exports, and what's the growth?
Okay. These premium products, the vision is that we should cross 65% in the next year or 1.5 years. We have reached from 59 to 62. Next year, vision will be to cross 65%. And I'm very, very confident that we should be able to do that. And with the top line growth also, because this year the launches were a little late and the market was tough, the prices were declining, because volume growth is much more than the value growth what we have got. So it was a difficult year, difficult phase, but the recovery has already started coming, and we are seeing that recovery in all the segments. As I told you that we are going to grow everywhere. And regarding your second question, which was exports. Exports are showing a sign of growth. This year it will be beating last year, but the export growth won't be much, but will be beating last year. And the future for export is looking good actually. Again, we are going to keep the aggressive target for export because we have bagged some registration in South America and some more are expected. And European business also is expected to grow for us, which was very, very dull in the previous 2-3 years. Some business in CIS also maturing. So looking at that, I believe that these markets are going to open up. Also, Australia is going to open up for us. So ultimately, our white label exports and also the technical exports are going to start now. So this will give good boost to our international business also.
Thank you so much, Mr. Aggarwal, for joining us, giving us a sense of how Q3 panned by and hopeful of a better Q4 and FY26.